Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be looking at some of the bearish pressures which have been building up for the Bitcoin price in the short term, which it has to overcome for the continuation of the long-term bull market. So we'll have a look at the Bitcoin price in terms of the different time frames, as well as the 60-day cycle and the liquidation heat map, which has been very accurate in telling us the range of prices we can expect in the short term with Bitcoin. And as per usual, we'll have a look at the wider markets as well. So if that sounds interesting, you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. So here we are in the 4-year cycle. We're just about starting to make our move towards the end of this bull market. And on this journey, as we're going to come across some short-term bearish pressures, and we seem to have got some now, and we're going to have a look at those today. And I'm going to start off with the daily time frame. Okay, so just to continue with the theme that we were looking at over the last couple of videos, and that is the inverse head and shoulders potential that we were seeing on the Bitcoin price. As a quick review to that, let's have a look where that was, and that is here, and obviously we made a new all-time high at 112,000. But if we look left here, we know that we've got a left shoulder and we've got the head, and we had the potential making of a right shoulder here. Obviously we've got rejected at about 112, and the question is, can we make this right shoulder here? We don't obviously have to do that, and oftentimes when the price comes up to this level here, having made a left shoulder and a head, it can quite easily go through like this. But in terms of the probabilities, it looks less likely to do that than to make some sort of a short-term pullback here. The more probability looks like they're going to have at least a short-term move to the downside. So we're going to have a look at exactly what those pressures are now. The first thing to note is the RSI here, and we've got a flat RSI at the same time as we've got a rising price here. So we made a higher high on the price without making a higher high on the RSI. So we seem to be getting a loss of momentum on this big rise that we've had here. And secondly, when we zoom in at this point, we'll also see a very strong bearish candle developing. So on Friday, we got this red Marubozu candle on the right hand side of this loss of momentum here. And this is what we call an outside bar bearish engulfing candle, because it engulfs the previous green candle, giving it a strong bearish tendency here. And at the moment, as often happens, when you get something like this, a strong red candle, or even a gravestone doji candle, etc., any bearish candles, you'll see that the following subsequent candles tend to run up that candle. So at the moment, we're just getting a run up back towards the high of this. So normally when you get a run up on a bearish candle and on the opposite side on a bullish candle on a downward trend, it tends to be around about the 61.8 or the 78.6. So if we just stretch this a little bit to give you some sort of an idea where that would be. So what we're going to do is to take the top of the red candle to the bottom, and at the moment the price for Bitcoin has come all the way up to the 50% Fibonacci level, which is about 109.2 thousand. So that's where we are currently here. But as I just mentioned, when we have a run up on a wick or a candle like this, it tends to be usually with higher probability up to the 61.8 or the 78.6. Of course, it can still go and test that and can get rejected at a lower price, but these are the two higher probability plays, and these are at 109.8 to 110,000. So this is where you would expect the higher probability for this price to come back up to, either at the 110 or the 110.7 at the 78.6. At this point we should make a lower high and get rejected to go back to the downside. And if we have a look at the RSI, this also seems to be giving us a clue that the RSI coming back up here, just like the price, the RSI doesn't seem to match the price increase. So while the price has come up to the 50% Fibonacci here, as we've just seen, if you do the Fibonacci level on the RSI, if I stretch this a little bit, you'll be able to see quite clearly that we've only come up to the 23.6 and not at the 50% Fibonacci level. So you can see that the RSI is not matching the price. So the chances are that even if the price does come up here and even break above the previous high, the RSI is unlikely to match this. So the chances are we're going to end up with a lower high here and a possible higher high here should we break above this. But even if we don't do that, if the price does come up faster than the RSI, then that is what we call a hidden bearish divergence. So either way, it looks like that we're going to get rejected unless, as this price goes up, the RSI starts to charge back up again and then matches the price. And at that point, it will invalidate that. So this is just a few things to keep in mind. But on the higher probability play, it looks like that we're going to get some sort of a lower high being developed here on the way back down. So that's on the daily time frame. And on the weekly time frame, once again, we do have a bearish divergence because at this point here, which was the high of 108,000, where the RSI matches down here, of course we went up to 112,000 here, making a higher high, but look at where the RSI is. The RSI is at a lower high. So once again, we're getting a bearish divergence on the weekly time frame, saying that we are in for a period of either consolidation to allow the indicators to reset again or some sort of a pullback down here. And also yesterday's close here, what we have is an indecision candle. So we've got a wick at the top, a wick at the bottom, and we've got a smaller body in the middle. And usually the characteristics of that would be some sort of consolidation for a few weeks at least. And if we move on to the monthly time frame, this is potentially quite dangerous for Bitcoin. So we really need Bitcoin to have some sort of a breakout in a big way in order to cancel out the bearish divergence that seems to be forming on the monthly time frame. So what we have here quite clearly, if you come back to this price at the 108,000, if you look down here on the RSI and then the 112 that we made, which is obviously a higher high, but look at the RSI, we've made a very substantial lower high here. So there seems to be a loss of momentum as expressed by the RSI here. So what we really need is for this to have a big move to the upside followed by a big move on the RSI to invalidate this bearish divergence. And the reason why this is a little bit dangerous is because it's usually on the monthly time frame when we get a divergence like this. This is where we get the end of the 4-year cycle. I'm not saying that we're going to get that. What I'm saying is that there's a potential and a danger of that happening here. Because when we zoom out, we'll see quite clearly on the monthly time frame, when we finish the first cycle here, in 2013, we had a bearish divergence on the RSI here. At the end of the second cycle, once again, we got a flat RSI, but a higher high on the price. So once again, bearish divergence on the second cycle. And on the third cycle, this was even more prominent. At 64,000, we got the RSI up here. And then at the 69,000, so obviously a higher high from the 64, the RSI was well down. And this is the danger here, that we already had a bearish divergence up to the 109,000. And now that we've made a new all-time high at 112, made a new all-time high with a higher high in the price, but the RSI seems to be lagging behind. So just something to be aware of, not to frighten anybody, but just to bring this information to your attention. That is something we need to keep an eye on. And if we look at Bitcoin through the eyes of the 60-day cycles, as we've been doing over the last 2.5, 3 years, on the current cycle, we're on day 49 at the moment, and we expect this current 60-day cycle to finish in the first week of June. So we have around about 11 days to go into the end of the cycle. And usually as we come to the end of the cycle, as we've seen time and time again into the last cycle, then the one before and the one before, we tend to get a decline into that 60-day cycle end for the beginning of a new cycle, and we can then go again. So once again, the 60-day cycle seems to be giving us a clue, apart from the bearish divergences, that we may well be entering a period in the next 10 to 15 days. It's obviously a flexible time period. It isn't an exact 60-day cycle. As we've seen before, we've had this cycle run up to 38 days, exact 60 days, 56 days, and we've had cycles up to 80 days, as well as we've seen here 38 days. So this outside bar red candle seems to fit in nicely with the 60-day cycle as a signal for this price to come back down. And the question is, how far can this price come down? And obviously there are two options here, either a shallow pullback or a deeper pullback. And I've got these two levels marked here that if we get a shallow decline, it wouldn't be a shock or a surprise if we came back all the way up to the tops of these candles here, which are at around about the 98 to 99,000. So this is where I would expect some sort of a shallow decline. And if it wants to go a little bit deeper than that, then the bottoms of those candles, as you can see from this support line, would be around about the 92, 93,000. So really the range we're looking at for this decline into the 60-day cycle, should we get it, would be between 92, 93 at the lower side and 98, 99 on the higher side. At the moment, what we do have is that we do have this white line which has been providing support from all the way back here, which was back in April, and then we came and found support one more time at the beginning of May, and just recently we found support here one more time on the 19th of May, and yesterday we found support on that one more time. So this is quite a strong support line as it's developing. So obviously if the price is going to go much further lower than that, down to 99 or 92, 93, we would be expecting this to break down here. And if we move on to the weekly time frame, I've put on the other white line, which is the 50 simple moving average, because as you can see quite clearly on the weekly time frame, the Bitcoin price does tend to respect and get support 50 simple moving average time and time again, as we've seen historically for it to do so. So we do get a very good strong support on the upside, and then obviously we get rejection when the price is going to the downside. And currently the 50 simple moving average is at 81,000. So obviously in the next few weeks, with it being a rising moving average, we would expect it to be moving much higher. So by the time the price does come back down, if it does, this will be much higher to maybe 92, 93. So again, this may be giving us a clue as to where the price may well be coming back down if it wants to come and find support on the 50 simple moving average. And if we move on to the liquidation heat map, which are the leverage players with their stop losses, this has proved to be quite accurate in terms of giving us some sort of a range between which the Bitcoin price seems to be oscillating in the short term between 24 to 48 hours. So in the next 24 to 48 hours, this is giving us some sort of an insight, a clue as to where the price may be wanting to oscillate. And the lower part of that is at around about 108.5 thousand, and at the top end of that is 110.7. And this is a moving dynamic, so this changes hour by hour. So it's always a good idea to keep checking this as other zones are developing at the bottom side as well as at the top side. And if we move on to the SPX on the daily time frame, what we've really seen since the Liberation Day fall that we had back in April, we've had this V-shaped recovery. And while it hasn't actually quite made it to the previous high, we are seeing a decline back to some of the averages here. So we've gone through the 8 EMA and now just finding support on the 21 simple moving average. But we have the 50 simple moving average lurking down here at 55.80 and the 200 simple moving average at 54. So these are the likely targets for this to come back down to before we reset and go back up, and the continuation of the bull market. So what we're witnessing is the weakness of the SPX. As we've had a very big move to the upside, then we would expect some period of consolidation either to the downside or sideways for a while until the RSI can reset itself, maybe come back down below the 30 and then start moving back up again. And if we move on to gold, what we can see is a massive parabolic move that we've had. This is a monthly time frame, and we started this parabolic move from around about September 2023. So we've had 2.5 years of a massive move for gold. So at the moment it's at 3,335, and we are seeing the RSI get very stretched at the moment. It's at 89, so it's very much in overbought territory, and of course this can continue, but what we are seeing is a loss of momentum when we turn down to the lower time frames. So when we have a look on the weekly time frame, we got this gravestone doji candle, which is a very powerful bearish candle which should bring the price to the downside. However, we are still getting a run back up on that candle. So this candle hasn't really played out yet, but it is showing quite strong resilience by just going sideways. So it's consolidating in a sideways movement rather than coming back down to retest the lower levels as we would normally expect. So let's see where this goes to. But certainly, if the RSI is going to reset back down here, we would expect some further decline in the gold price. So there you have it, the whole program based on what's happening with Bitcoin in the shorter term, and to highlight some of the bearish pressures that seem to be building up with Bitcoin through the lens of the 60-day cycle, as well as some of the time frames and the simple moving averages. And for those of you who are interested in our portfolios, this is the state of play as it is now, from the start at 100,000 back in 2023, at the close of play last Friday. Our passive portfolio, we are running 2 portfolios there. A passive portfolio where we do absolutely nothing. We chose these companies at the beginning of 2023 and 2024. So from a start of 100,000 back in 2023, this has moved up to 332,000. And the trading portfolio where we do ratio trades, this has moved up to 423,813. And many people ask us about the ratio trades that we do. The ratio trades are really between the miners, a bit like foreign exchange where they do pairs trading. So with the ratio trades, what we do is to move from one Bitcoin miner to another when the charts tell us that is the case. And the most recent one that we had was on the 1st of May, we saw an opportunity to move some Marathon Digital Holdings into Iris Energy. Then within about 2.5 weeks, we got an opportunity to take a 15% profit. So we've done about 40 trades there. And the blue numbers here are all the profits, and the red numbers are the actual losses that we've had with 40 trades. And back in 2023, we didn't do ratio trades, but we did swing trading. And for those of you who want to know what our record was for swing trading, the first round of swing trades we did was back in March 2023 with these results here. So you can see we did really, really well with big increases. Then in round 2 in July 2023, we did even better with some really good performances. The round 3, we got stopped out in all of them. We did reasonably well here. And in December 2023, we did our last swing trades where we did reasonably well here with a 24% increase. But we had a second part to that where we had a minus 18%. So overall, we still had a profit. And to just give you an overall picture with the Bitcoin miners against the Bitcoin price, over the last many years, we know there's quite a negative perception about the Bitcoin miners, and rightly so. It's entirely understandable, because when you look at the last 18 months, we can see quite clearly with this ratio chart of WGMI, this is the basket of ETF for Bitcoin miners against the Bitcoin price. We can see quite clearly that the Bitcoin miners have been underperforming Bitcoin over the last 18 months. But just recently, from April, we seem to be getting a bounce back to the upside. But prior to this, we can see quite clearly we've made some very big gains in the past. And the question is, can we make those big gains here? So the next 6 months or so could very well provide a different outcome to the negative perception that the Bitcoin miners are getting here. But obviously this is a very volatile area, but if it's something that you're interested in, maybe not to invest, but to just follow in the next 4-year cycle, you can join the growing numbers of the private member section here on this channel, where we do 2 dedicated videos for both Bitcoin and the Bitcoin miners in the private member section, one on the weekend and one in the midweek on Wednesday. And also every single day, Monday to Friday, at the end of the market trading session, what we do is a market update. This is the last one that we did on Friday, and what you get is a full rundown of what's happened on the day, every single day. And if there's any important information, then I bring that information to you in the form of the charts. And of course, when there's a ratio trade, I bring that to your attention here as well before taking on the ratio trade. And many of the members don't take part in ratio trades. They just come for the 2 videos as well as the market updates on a daily basis. And as you can see from here, there's a lot more members only videos that you can see than the ones that we do on the Monday. And if that's something that you're interested in, all you have to do is go to any of my videos, and then below the videos you'll see the join button here, as well as in the description box there's a red button here, the Bitcoin Miners membership join link. When you click on that, and you'll get this box for the meager price of a coffee per week, which comes to £12.99 per month. You can have access to 2 videos per week, as well as a market update every day, as well as have access to the ratio trades going forward. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. If you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.